Hello students, I welcome you all to this video lecture on procedure and incidence of GST. In this video lecture, we are going to discuss illustration 14. A dealer of Mumbai entered into contract with the supplier in Kerala. Very important because Mumbai is in Maharashtra, Kerala is a different state. So when goods are being sold from one state to another, IGST will be applicable. For that, this particular mentioning of different places is very important for the delivery of a machine along with essential accessories. From the following information, calculate the transaction value and also GST payable. Machinery cost, that is sale price of machine, is given 11 lakh 20,000. It is including GST. So first and foremost, before doing anything else, first we have to deduct the GST amount that is there within this. Only then we have to proceed. Following expenses are not included. They have mentioned these expenses are not there. So we have to see whether they have to be taken or not. Installation charges, yes, they have to be taken. Primary and secondary packing charges, yes, they have to be taken. Design charges, they have to be taken. Bought out accessories not essential for its working. This is very important here. Not essential for its working. Not with regards to whether the amount should be taken or not, but this not essential will make this supply as mixed supply. It will not remain as composite supply anymore. We will understand the implications of this later. 1 lakh were supplied along with the machine. Following prices are included. Following are included in the price. Durable and returnable packing. Obviously, whenever there is durable and returnable packing which is included, we have to subtract that. We have to deduct that. Next, GST rate is 12% on machinery, 18% on accessories. This is where the type of supply will have its impact. I'll discuss about that in a moment. Trader has the practice of allowing 5% discount on the cost of machine. So trade discount is given, so we have to take that. He had purchased inputs on which he had paid IGST of 42,000. So this inputs is nothing but raw materials. He had paid 42,000. That means this is already paid, this tax is already paid. So where will this come into picture? Input tax credit. Okay, once you get the total tax liability, this 42,000 you can deduct as input tax credit. Only the remaining amount you need to pay as tax. So let's go to the solution. One by one we will try to understand all of it. So the first one, obviously cost of machine, but here it is including GST. So the first thing we have to do is we have to deduct the GST amount. So 11,20,000 is the total amount. 12% is the tax of GST, rate of tax. 100 plus rate of tax, that is 100 plus 12, so 112. 1,20,000 will be deducted from this. How much will you get? Cost of machine excluding GST will be 10 lakh. On this we will have to add the inclusions which are not being added yet. Installation charges 80,000. Primary and secondary packing charges 20,000. Design charges 10,000. Bought out accessories 1 lakh. So 80, 20, 10. 1 lakh 10 plus 1 lakh 2 lakh 10,000. Then total, this 10 lakh plus 2 lakh 10, 12 lakh 10,000 subtotal. From this we will deduct cost of durable and returnable packing 50,000, that is directly given in the question, and we will also go for trade discount which is 10,000 into 5%, 50,000. So total deduction will be 1 lakh. So by that we will get transaction value, assessable value, or even it is also called as taxable value of supply. So 11 lakh 10,000, 12 lakh 10,000 minus 1 lakh 11 lakh 10,000. So based on this we will have to find out the GST payable. This is important here. Why did we go for 18% of GST when actually the GST rate on machine was 12%? If you remember in the previous videos, I have discussed this. The type of supply will have a major impact on the rate of GST. If it is a composite supply, the primary product here is machinery, yes or no? So whatever is the rate of GST on the primary item, that rate of GST will be considered. All others will be ignored. But if the type of supply is mixed supply, and how do we know this supply is mixed supply? This statement makes it very clear. Bought out accessories not essential. So that means you need not have sent that accessories along with the machine, but you choose to send it. Because of that, the supply has become mixed supply, and whenever there is a mixed supply, 18%, even though the primary product attracts only 12%, the highest rate of tax, if there was something else and it attracted 28%, we would have taken 28% into account and we would have ignored this 12% and 18%. Does not matter which product it is, we will take the highest rate of GST tax. So we have done the same. 18% on 11 lakh 10,000, 18% is 1 lakh 19,800. I told you he had taken raw materials on which he had paid IGST of 42,000. That 42,000 he can claim as input tax credit. So when you deduct 1 lakh, this is not 1 lakh 19,000, it is 1 lakh 99,800. So when you deduct that, you will get 1 lakh 57,800. This is the net GST payable. You can go through the working note, that is I have already mentioned this. Because it is a mixed supply, we will take the highest rate of GST. Thank you.